Just talk us through what the market has done since it opened today.
Ros, there were heavy falls right from the opening of trade in the first few minutes, leading into about 10:30. Once the market had time to settle, over $100 billion wiped off the ASX 200 benchmark index. And the key stocks, if you like, in the ASX 200, the likes of BHP, the Commonwealth Bank, all tumbled right from the start. In fact, BHP at last check was down over 10%, got the Commonwealth Bank down 4.5%. So the index has now dropped below 6,000. And if you look at the peak to trough decline, you're looking at a fall of around about 18%. So at the end of last week, we just nudged what's called a correction. So a peak to trough fall of around about 10.5%. Once we hit Friday, and then we had a little bit of a mixed response this week. But come today, we've got market down around about 18%. Now, there is no technical definition for a crash, but we are moving towards the territory where an enormous amount of money has been wiped off the stock market, and it's starting to feed on itself. But I'm sure you'll see later, the oil price collapse over the weekend has been the real catalyst that's really spooked investors this morning, Ros.
Ian, how bad is it?
Well, it is the worst fall we've seen since the global financial crisis. It's a significant fall. As David said, a lot of big stocks, a lot of big names losing a lot of money. And these are the stocks that not just institutions, but ordinary investors generally tend to go for. They're the big household names, such as BHP and the banks. The banks, of course, are all under pressure as it is because of ultra low interest rates, which is really squeezing their margins. But as as we've just heard, the collapse of the oil price over the weekend, 20% decline, and that's on top of very significant decline since January as the impact of this virus starts to reverberate through markets. So we're seeing massive falls there. And look, ultimately we could end up with cheaper fuel prices, but a weaker Australian dollar is going to undermine some of those as well.
So the reaction to the fall in the oil price starts here, and it's going to spread presumably once other markets open around the world.
That's right. We're looking at an opening on Wall Street and in Europe tonight, significant falls. Wall Street futures were down around about 1,000 points earlier on, so probably accelerated. I mean, this market here today, we opened with serious falls, but since then those falls have just gathered pace. And there just seems to be no relenting at all. Almost 6%. We've lost about more than $400 billion from just a few weeks ago when we hit our peak.
Staggering falls. David, how are people feeling down there? I mean, they're watching more and more value being wiped off their portfolios.
Look, really interesting, Ros. There's actually a mixed response. So, look, if you look at the sort of market falls you'd get during a financial crisis, you're looking at peak to trough of around about 30% or more. So we're inching towards that territory. So it's natural that there might be some investor panic, investor anxiety, and people worried about, of course, their superannuation approaching or in retirement. So speaking to those folks, yes, there is a lot of uncertainty about where this will fall. We don't know how long this virus threat will last, and therefore it's very hard to crunch the numbers in terms of the economic impact. And that's the real question people have. What sort of economic impact will this have on both Australia and, of course, the globe? So there's uncertainty there that's really causing many investors a lot of anxiety, a lot of uncertainty. However, that said, what Ian said, absolutely correct. The market's fallen so much now that people must be wondering, well, where is the bottom? And the fact is that stockbrokers the ABC has spoken to already have said they're actually getting calls from some clients who are just, the word was nudging into the market, working out whether the CBA, for example, the Commonwealth Bank, has fallen enough to warrant it being what's called a cheap stock, or a cheaper stock than it was at the all-time highs we had just a few weeks ago. So there is an element of some investors going, well, hang on a tick, the market's fallen already so much, maybe it's time to buy in. Now, that's not by any means the main point there. Most of the activity, an extraordinary amount of it, is selling the market, obviously. But there are some clients calling some brokers saying, look, maybe it's time to get in. But as Ian mentioned, it's been more than overwhelmed by those selling stocks.
What is the advice to investors then? Ian, buy cheap, hold your nerve, or what?
It depends what stage of life you're at. I mean, if you're a young person and you've got a superannuation fund there, all of these things tend to even out over time. If you're approaching retirement, though, as David just mentioned, it's a much more crucial decision. Do you get in, or do you stay in, or do you get out and switch to something else? Possibly a bit late, to be honest, to start thinking about getting out. and you might just have to ride it through and hope that there's a recovery once this virus is under control.
We heard the Treasurer in Canberra there saying that this is a very different situation to the one we saw during the GFC and therefore calls for a different response. We're waiting for this economic stimulus package. What do you think will be in it?
Look, he's going to have to do something for households, and it seemed early on that the government was very reluctant to do anything that looked anything like the Rudd government response, which was the advice from Treasury Secretary Ken Henry at the time was go early, go hard, go households. So they actually gave money to all taxpayers, cash handouts, and that actually worked quite well. It boosted consumption, retail sales went up, and if you have a look at last year at the data just from the December quarter GDP numbers that came out the other day, the tax cuts and the interest rate cuts last year do seem to have boosted consumption. So I think the thinking now is that perhaps we should have a closer look at households and see what we can do. Bear in mind, households in Australia are incredibly indebted and wage growth has been really muted. So there's a lot of households out there that do need the cash. They'll spend it if they get it.
David, a final word on where we are in the markets then. Has it fallen since we've been talking?
Ros, it actually looks like it might be steadying it down roughly 5.1, 5.2%. Now, as Ian mentioned before, very importantly, Wall Street futures, which is a guide to how Wall Street will open up tonight and, of course, how we will fare tomorrow, it's already gone down 1,000 points at the opening of their trade. So they'll go into this evening and brace for that. And unless Asian markets, for some strange reason, open with not a huge bang down, then we might get a let up. But at this point in time, down 5% is already a very big hit. But it doesn't look like that could be the floor. But at this point, given the Wall Street futures and how Asian markets are opening up, it doesn't look pretty at this point.
Latest figures from here, David, is that both markets have hit 6% decline, which is an extraordinary start to the week. We have to leave it there. David Taylor down at the ASX and Ian Verrender here in the studio. Thank you both.